All right. So yeah, let's continue with this and figure out what's going on. Just to recap, we went over the climactic action. We had the change of behavior, which terminated the climax, and there was a rally after that, and a pullback, and all of that. So we went through quite a bit, and now I'm just going to continue on. So it's really important to understand the three places where Wyckoff would say take a position, because that's directly in line with the entries. One being that he would take it on the climax after the climax ended, and he would know that because of the change of behavior of the volume of the bottom right after the climax, and because that volume of the bottom had a lot of volume in it, and it was the first time where it was so much distance in volume. And what that did was indicate that the climax had passed and the trend was quote unquote tentatively up. Not confirmed, but tentatively. After that, the market had rallied and pulled back to test. And on that test, he looked at the clustered closes and indicated there was a lack of progress. And then he would enter there. And then finally was the breakout. Okay, so we covered all of that. We also covered a very important piece, and that piece is right here, right there, indicating that on a rally, you had cluster closes, shortening of the thrust, and diminishing and tapering volume, indicating a lack of demand. And the bulls broke that stalemate by doing what? By doing a climactic move where they ran it up and brought it right back down on heavy volume, indicating that it was a minor climax that terminated the upswing. That minor climax that terminated the upswing is important because when you are looking at markets today, or when I'm looking at markets today, one of the things to look for, one of the primary things to look for is a climax, because it tells you that the move has ended and another move is about to ensue. So that is one of the first things we want to take a look at. Now, continuing on that, where am I? Anyway, so I'll just continue right here. On the 16th. So what's happened here, you had a climactic bar which terminated the upswing and price starts going down. So what happens? Well, on the 29th, what is this? I think I'm going a little too far. On the 16th, all right. That is the close is nearly at the high point of the day. So all I'm saying here is that you had a climactic action terminated the swing, pulls back, goes to around the 18th. I think it was the 18th. Oh, the 16th, which is right here. You had a high end close. All right, that's a bullish indication. Again, bullish and bearish indications and weighing them to judge which side is stronger. What is the bullish indication here? High end close. Okay, which is the reverse of the bearish indication on the 9th. All right, so on the 9th, you had this low end closed climactic bar. On the 16th, you had this high end closed bar. But does that bar by itself mean anything? No. Okay, this is our first sign that the reaction is nearly over. So his quote unquote first sign is a high end close. That's his first sign. That doesn't mean that it's going to reverse right now. It just tells you that on the pullbacks, you're looking for certain things. Just like you looked for climactic action, you're looking for high-end closes as well as low-end closes, meaning the closes are on the extreme high end or low end, and that tells you about the bullishness or bearishness, because in the struggle during the day, the bulls won because their close is high end. So all right. So this is our first sign that the reaction is nearly over. And so here we have a buying opportunity and expectation that the advance will resume. So again, this is the fourth buying opportunity. But I'm going to explain why he's really saying that this is a buying opportunity. It has nothing to do with just having a high-end close. All right, it has to do with these footnotes. Further confirmation comes in high support on the 17th and in the almost complete drying up of the volume. So we have a high-end close. Then on the following day, what happens? Volume diminishes and makes a higher low. So you're putting a couple of pieces together. One day you have a high-end close. Second day you have a higher high and higher low and a lack of volume. So what is that telling you? He's trying to gauge whether selling is gone. All right. The closing price on the 15, 16, 17, 19 shows support within a narrow zone. Again, clustered closes. When closes are in the narrow zone, that's a good thing, especially if you're looking for a purchase, because it's telling you that the pressure, meaning supply pressure, has diminished. All right. We therefore look for the advancing tendency to be resumed. All right. So you're just looking for the advance. When is it going to be coming? Who knows? The following 4 days, we see a higher high, higher low, accompanied by gradually increasing volumes, bullish behavior. This brings the market up within a fraction of the high figure of the January 9th. On the 23rd, a volume surge of almost a big volume surge right here. That's also climactic, by the way. All right, now I want to go back to this bar right here. This bar had an increase in volume, a low-end close, and was immediately followed by a high-end close. So it's important to understand this behavior. Why? Because he said you should look for a position. You have a buying opportunity there, right? So he says that. So here we have a buying opportunity in expectation that the advance will be resumed. Double star. Let's go to the double star. Now forget the double star. Go to the single star. This is the key. Note that there is also indication of a minor selling climax. When? On the 15th. What is the 15th? I thought it was this bar. 7, I don't know what is it, but it must be this bar. Note that there is an indication of a minor selling climax in the somewhat marked increase of volume on the 15th, but I can't really read this. It looks like the 16th. I don't know. 6, 7. Let me see. This is the 16th. Yeah, then this must be the 15th. So yeah, it's this bar. So why is he really looking for a purchase here? Market pulled back to test. Yeah, we know that. Second, or actually the first reason, is because it is indicating a minor climax. Just like there was a minor climax up here, there's a minor climax here. This volume is bigger than 1, 2, 3, 4 days on this pullback. So in reference to a pullback, this has the biggest volume in about 5 bars. Okay, and right after that, you have a high-end close. Bullish. Why? It's climactic action. What does climactic action do? It ends the move. What else? It has the climactic action has no follow through. It's immediately followed by the bullish bar. And that is why he's looking for an entry. Okay, so what is something practical that you could take away from this? On the pullback, what you want to do is look for climactic action. That is the whole point here, that when you're looking to get in for a resumption of the move or looking to buy a pullback, what do you look for? Yes, you look at levels. And two, yes, you look for climactic action. Why? Because it is telling you that the pullback is about to be finished and that the trend will now continue up. How do you confirm that is a minor selling climax? It is because of the bullish bar right after it, meaning the climax has no fall through and B has a bullish bar right after it, and you know it's bullish because of the high-end close. Third, the bar right after it has practically no volume. In my view, that right there is confirmation. All right, these three bars confirm that the pullback is basically done. Why? Because you have a climax here and you have its test here. Look, compare the volume of the down bars. This volume is less than 1 million. This volume is 2 million. So the volume on the climax bar is double, and the volume on the test, meaning the bar, the next down bar, is less than half the volume and has a bar in the middle, which represents demand. So consider it like this: climax, change of behavior, secondary test, if that's how you want to think of it. It's basically heavy supply, climactic action, bullish demand, and no more selling pressure. So you're comparing this bar's selling pressure to this bar's selling pressure and saying, oh, it's not there. You're also comparing this demand bar to this selling pressure and saying that there's more demand than supply. Okay. And I think that's enough for today. Thanks.